The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good. Hope everyone's doing fine. We are in Hong Kong, and it is nighttime over here, 10 o'clock at night. So we're going to take a quick look at some of these markets. I was on the airplane during the blast off, so the first thing I thought of when I saw the prices getting off the plane was that Meryl Streep and George Clooney had switched to the Republican Party almost overnight. Well, that wasn't the case, but we did have one explosive move. I was surprised at how big it was. I didn't get to hear much of the speech, so I imagine everyone said it was positive. Even some other people in the other party thought it was positive, so it was very interesting. I'm going to cover that in just a minute. But first, we'll take a look here at the DAX. As you can see, we had a completion of an ABCD move on the DAX during that big run-up on Wednesday. In fact, we're going to cover the Hong Kong market also this morning to look at it. But most importantly, we need to talk about the gold and the silver because I think something really significant has happened there, and we really need to cover that. But let's just look at this DAX. As you can see, we got up to the 12,000 level. That's pretty much the same type of magical level that we've had here in the Dow Jones at 20,000 or 21,000. I think it's 21,000 and change now with the big gap up, but we will get into that just a little bit later. Now, I've posted into the room here for you folks a really interesting article that was written 6 years ago by Peter Brandt. Peter is about my age. We've been in the business about the same length of time. He's a consummate researcher, does some really spectacular work. And as you can see here, if you get a chance to read this, this is an article about how there are no gaps in the Dow Jones Industrial Average going back over the 150 plus years of the Dow Jones. And remember that many of those Dow Jones stocks have changed during the 1929 debacle. There were 16 of the Dow stocks that have gone tapioca. I believe there is actually only one original Dow stock, and that is General Electric. But I'm doing that from memory, and I could be wrong. But I believe General Electric is the actually only one member that is still there. But I'd have to double check that. I'm doing that. That's thank you very much, Mr. O'Brien. Tommy's listening, and he agreed that it was General Electric, so we'll watch and see how that does. That stock has not been acting as well as some of the others. Let's take a quick look here, folks. I just wanted to start out here. We'll do the Dow Jones. I'm going to just to show you what we're looking at here, because this is really history being made. We're living through it, and this is the last time for this old cowboy to ride this horse. But take a look at this. You'll notice here on the Dow Jones Industrial Average, giving the one that we had on Wednesday, you'll notice that we had 1, 2, 3. The fourth one was on Wednesday, and it was 90 points. That's the biggest gap we've had in quite some time. Now, I don't want to be a person to rain on anybody's parade, but if we close in the lower end of the range today, at 20,000, say 21,000, if it's possible that it would even be down. But if we close at 20,700, something like that, that's going to leave that two black crows up there, which is a very rare pattern in the thing. And plus, if it were to gap down on Monday, you'd leave an island reversal, which would be interesting. Now, if you'll notice this chart, going back to the January low, we had an ABCD pattern that completed up in this area somewhere. The problem is that the BC swing that took 4 months, came down to a perfect 61% retracement of the June swing, but it didn't even, make it 23% of the January move. So these markets are, very, very powerful. All I know is that these gaps are going to be filled, folks. It's just a matter of of when, whether it's going to be in my lifetime or somebody else's, but it will be very interesting to see what happens. Since we're talking about island reversal patterns, we did have one. If you'll notice here, we'll put it up here. This is Tesla. You'll take a look here at the daily chart on Tesla. We gapped down, I believe, last week after the earnings report, and we've continued to go down. We had a little 3-day rally during the explosive move that we've had here. But this is a pretty negative pattern, folks, because if you look at it going back to February, we've completed the ABCD pattern up there also. So that's another stock that makes it look, very, very interesting, from a standpoint of, what's, going on with some of these things. Now, one other thing that I wanted to mention here, and this is, we have plenty of time to cover this, but let's take a quick look here at the gold and silver market, because we have had some pretty expansive things happening here to the downside. This is a chart we were looking at the beginning of the week, if you'll remember. This was the ABCD structure that we had in the gold up around this 1260 level. The high was 1264, I believe, and we've had a pretty significant correction since that time. If we take a look at the silver market, you're going to see the same type of setup where we got to the ABCD structure on this one, and we've had even a both of them are equally dramatic. They're to the downside. So these are the corrections that we're seeing. If we take a quick look here at the silver market, you'll be able to see here. We'll look at silver first and then look at gold. Hopefully I will, if I can get this little puppy to hang up like it's supposed to do. Give me 1 second now. Oh dear, I have to change the size of the graph. Just a second. Here we go. You can see silver. Last night we got down to that lower part of that parallel channel, but the fact that we've had these really wide bars after the ABCD structure tells me that we're most probably getting ready to head a lot lower. That would be my suggestion. The reason why I think it's going to be bigger is because this is part of a bigger ABCD pattern that started way back from the 1126 level in the gold several months ago. And we've been very bullish gold up until Monday when we exited the positions. And now what we're doing is watching to see what this correction is going to be. I'll just show you that high that we were looking at. You'll be able to see it here. Oops, I don't have that one. Just a minute, I'll pull it up a second. Here's the key here, folks, that the problem lies in the gold market, and that is in the XAU. Now here you've got a stock market that is going absolutely nuts. They're buying everything that's offered out there. And remember, for every buyer there has to be a seller. So remember that somebody was selling stock all the way up on this thing, especially on this last day here with 300 points up. There's people on the other side, because every buyer there has to be a seller. So ask yourself, who's selling the stock? It certainly wasn't me. I was on a plane. You can't blame me for that one. Anyway, but look at the gold. Look at the gold line here over the last 10 days. You'll see gold had a real explosive move to the upside, getting up to that 1265 level. However, the XAU has been breaking down for 10 days. It's in its third week of correction, folks. Take a break. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at this gold because we've topped up here at 1264. I don't think there's any question of that because we've come down over $34 in 3 days. That's not a good sign. That should have stopped at the 1232 level, and we haven't. Of course, we went another $8 below it. Now, as John Logan mentioned on his show, if this market should turn around and close, strongly today, maybe this would be the bottom. But with those wide-ranging bars that we have, I think it's very, very smart to just wait and see because it's come down very quickly. And look at silver, how quickly it came down. It'd been the strongest all during this move, but in fact, when it finally did give up, when it went up below the $18.30 per ounce level, that's when the real acceleration started to the downside. The real key to this, folks, is the charts that we started with today, and that's those ABCD patterns. On the gold and the silver. Both of those were just about as perfect as you could get. They're right out of Gartley's book on page 222, where he describes the easiest trades to do are to buy the first ABCD in a bull market and sell the first ABCD in a bear market. These aren't the first ones, but these are still ABCDs in a bear market because, we had a higher high way back in 1385 level. This high was 1265. And so we should have some support somewhere between the 1190 and 1160 area, but that'll take some time. Remember, the last time we had a $34 correction in gold, which was back in February from the 8th to the 15th, it took a whole week to do it. And it was this time we did the $34 in about 2.5 days. So that's the main thing to really keep in mind, I think. So that's the main thing that we'll see to see what's happening, and we'll go from that level. So far we've went from 1265 down to 1227. That's $38. That's $4 under the the harmonic number. Maybe that's close enough, folks. No, we've been lower than that. We've been down to 22, I believe. So we've actually gone a little bit more. So I would think wait, and since this is a Friday, of course, I would certainly wait because there's a lot of unknowns coming in. But that we're going to get plenty of chances to get long the gold when it's time. It's been pretty good to us, so I would suggest we just wait here just to see what the next move happens to be. Now, I would like to switch over here for just a little bit to take a look at the U.S. dollar index here. And if you'll give me 1 second here, I will pull it up. I know I have it. Well, I think I have it. Let's. We need to cover one more, a very, very, very important one. Since we're looking at ABCD, this is actually more important than the dollar index. Those of you that watch crude oil, if you like ABCD patterns, keep an eye here that this is the chart over the past couple of weeks. You can see that really nice 135 pattern that we had on March 1st. That led to the move to the downside. If you'll notice that the time in the moves between the 27th and 28th is equal in time between the March 1st to March 3rd. The price expansion from the 28th into today in the crude oil comes in at 1.618. That translates to a great deal of support at 52.50. So there's a possibility here we should be getting ready for a potential rally in the crude oil today. Now, anything below 52 certainly is not going to be indicative of a rally. So you've got a place to play defense, as John Logan usually says. So keep an eye on it anyway, just to see what's going on. One other thing I'd like to mention, folks, the folks that are here in the den that get to come in each day, that trade alone and stuff, to share the information that we have with all the folks on, Tom O'Brien's show with Basil and David White, Steve Rhodes, John Logan, all of them. They have such great information from different areas. Yesterday, the last time I was on the show, which was Tuesday, I believe, Steve Rhodes shared some things on, statistics on the P index dates and how often they occur and stuff like that. But those things are very, very helpful for timing purposes. They don't all work like everything else, but, they do have some really smart people. And Basil's in there with, he's been basically bullish the stock market, I think, since Hector was a pup, and Hector's only about 6 months old now. So he's certainly had some, wonderful trades to the upside. So it's really good that there's a diversity here. Let's switch over here to the euro. I want to take a look at this just to show you what we're seeing here in the euro. That last night we were able to complete a 3 drive to a bottom pattern on this 30-minute chart going over the last week or so. You'll notice that came in right at that 105 level. What we've done now is we've rallied up to a 61% retracement again off of the last move. That comes in at that 105.70 level. The high is 105.73. That took out the high of March 1st by 3 pips and didn't go anywhere. So, that's a sign that this market is probably getting ready to trend lower. So keep an eye on that euro at that 105.73 level, because it's going to be a really important spot. Should this market really explode to the upside and move another 100 pips higher up above the 106.35 level, this would say that the pattern that we've had in the dollar index is most probably getting ready to, ready to collapse below that. But the dollar index has held the breakout, extremely well, and that's the real key to this. Oh, I wanted to mention one other thing, since we had these really wild days, just to show you what was happening here in Hong Kong. If you'll notice, on the explosive day when we were having the rally, we had been down to the 78% breakout 3 days, and then we had the really strong rally yesterday that stopped right at the 61% retracement, went about 40 points higher, and then reversed 300 and some points and is down another 175 points today, going down below the 78% level. So that sets up an A, B, C, D structure at least another 300 points lower in the Hang Seng Index. That's the fact that the news was so very, very bullish, but it certainly wasn't handled well by this particular index. And as we've seen from some of the charts that John Logan pointed out in the Shanghai, it's pretty much the same section there of what we're looking at. So anyway, that's what we're watching. By the way, on the index itself, the Dow Jones Index, of course, it's a weighted index, and the biggest weight in that is the big daddy rabbit of them all, which is the price of Goldman Sachs at 253 today. I believe it hit 255 and change yesterday on the gap up. So those are that's the biggest one. Of course, I believe the next one is 3M, and then there's got Home Depot and United Healthcare, and a lot of these others are really big. So that's the main thing. One other thing that's really interesting, and I want to bring this to your attention. I hope we can do this before the break. Whether we can or not, we'll still talk about it. Yesterday, and I don't know if you like these numbers or not, but on this big run up yesterday, the DAX index hit the exact, to the tick, 78% retracement from the 2007 high, if you like Fibonacci numbers. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and one of the reasons we're here in Hong Kong is we have a lot of friends and students here, and I try to get over once a year to do a seminar where we do some, really fun stuff. But tomorrow's going to be a little different because I'm going to be sharing some new stuff that I've received from a couple of my students that I've trained to go on to bigger and better things. And believe me, when I say bigger and better, some of these guys have made a lot of money. I'm talking lots of zeros, but we're going to be going over that with the folks. I'm going to give you a little taste of just to look at it for today, just for the fun of it, just to see if it works like we think it's going to work. This is all experimental now, boys and girls. So remember, when Mr. Rogers brings in his animals to take a look at, you have to remember that these are only experimental. If we take a look here at the E-mini S&P, which everybody likes to trade, the better things to trade, of course, are gold and crude oil and the euro and even soybeans. You get more bangs for the bucks than you do, well, unless you go long and just stay long forever, then you get lots of bangs for the bucks with the E-mini S&P. But we hit 2,400 on the E-mini during the big explosive move to the upside. That's another thing that I'm going to be covering is how to handle these explosive moves. It's not easy to do, but there are little techniques that help you to enter markets that are in runaway phases. And when they're doing this, actually, the amount of risk that you have is extremely small, believe it or not. But if we take a look here at the E-mini S&P, you'll notice that we've had a pretty big move to the downside. We went flat last night around the 23.74 level. We're currently trading around 23.79. Watch the price of 23.83, folks. If the market doesn't get any higher than 23.83 and doesn't and closes lower for the day, and that'll be about unchanged. So if it hits 23.83 and closes in the lower part of that range, and if it closes below 23.73, just come in Monday with your selling shoes on because it's going to be really rocking and rolling to the downside. So we'll just watch that for general purposes. Now we need to switch gears here and talk a little bit about the soybean market because we've had a big explosive move that we had talked about. Thanks to our good friend Mr. Z in the room, alerted to us the fact that corn and wheat and soybeans were at really critical levels, which is very important. But what we want to do now is take a quick look at the first one we were looking at last week, which was the soybean oil market. And as you can see, as I post this chart, you'll be able to see that we went down to that 32.30 level, spot on, which was the 78% level from the low in July. That completed that three-drive pattern since December. A beautiful Gartley pattern, and it had a tremendous move on a dollar-for-dollar basis. It moved over $900. Here again, you're looking at a margin of only $1,500 in soybean oil, moving that much. I mean, you stop and think that the margin on the E-mini S&P is 5,000, and you don't see 40-point move in the S&P in one day, which should even be more spectacular. Even with the big move up, we were only up 25 or 26 points. So that shows you that some of these things have great volatility, even better than the E-mini. But the E-mini has this spell that it casts over everyone that they love to get in and trade it. It used back when it was big handles. In other words, when it was $500 a point versus $50 a point, it seemed to be a lot easier. But nowadays, it does have these herky-jerky motions. And as we've heard from our friend Shane Smolian, who's been spot on, is that the Federal Reserve is in there. So whenever Fed time comes around 10:30 in the morning, kind of pay attention to it because that seems to be between 10:30 and 11:30 is when they're doing their market operations, and that's been a good spot for the market to back off. That could be the same thing today. Remember, this is Friday in an up week, so and it's also these are one of the more. This is the last of the bullish days of the month. In other words, the last 2 days of the month and the first 2 trading days of the month are the best, and this is the end of the month. So this is going to be interesting to see what's happening. But keep a really close eye on that 23.83 in the E-mini S&P because that's a really key level. I just can't tell. And that number in the Nasdaq comes in at 53.75. And actually, the Nasdaq is actually less looks less bullish than the than the S&P or the Dow is by far the most bullish, but that's a skewed thing because of those price-weighted charts. All right, let's get back to the soybeans a little bit, and we want to go take a look here at the. One second, I had the wrong chart up. Give me 1 second here, and we will bring it up here. Oh, please tell me I don't have. I do have it. Give me 1 second, and we'll be okay. All right, see, we're opening a little lower, which we probably should be after the sell-off. We got a lot of gaps here that we have to fill in the Dow Jones, folks. And with a no unfulfilled gaps, you're looking at gaps all the way down to 19,800. So we'll take a look here at the July soybeans. This is one that we looked at last week, even before it was happening. Back on the 27th, we had the new moon and solar eclipse. We had some really nice nominal cycles of 36 and 70 days coming in at the same time. That was the work of Jim Hurst. You had a perfect A, B, C, D structure coming in at the 1027 level. We rallied all the way up to 1064. And now we've been in backing and filling over the last few days. But as long as we stay above this 1027 level, this has a very, very bullish pattern, folks. That's a very strong 135 pattern that you see there from November, January, and March. February 27th. So, and it's coming in right on the lunar cycle. Those are, very important, as we already know. So keep in mind that these beans still look bullish. There should be a great deal of support around the 1040 level, 1035, but below the 1025 level, you don't want to have anything to do with it. That would mean that cycle has failed after a pretty substantial rally, and that would not be a good sign for soybeans. We saw this happen in gold. We saw it happen in silver. So that's another one that you want to watch with a great deal of interest, because we're coming into the growing season now. We've moved our operation to July soybeans. That's the one that has been, that's old crop beans. November beans look far more bullish than the others. We'll start covering that next week. We'll be looking at November beans and December corn, getting an idea of what the farmers are planting and getting ready to plant, because as we know, every time we have something in the ground, you can see the reason why we've had this rally in the soybean market was twofold, from what I've understood from our good friend Rich Anderson of Anderson Capital Management. One is that there was really bad rains in Brazil, and they were not able to get the crop out of the field as they wanted to, and they couldn't make deliveries. And so there were very few soybeans deliveries coming in at that time. So, keep an eye on it, that's what we're looking at. That's very important. We'll take a little break here. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and we're going to take a look here at the U.S. dollar index, a daily chart going back to last April. As you can see, we made that 3 drive to a bottom pattern, just absolutely spot on at that 91 level. And then you can see the 135 pattern that occurred right after. And as you can see, we had the breakout, above the old highs that occurred back in the 95 level. And since that time, 99 level, we came back, and this is the real key part to this, is we came back and tested that 99 level right at the exact 61% retracement that came in off of election night. That's what's so important. Now, one would have thought the fact that we had such an explosive move in stocks that we would have made an ABCD on that structure, which would have taken the U.S. dollar up into the 107 level, but that in fact did not happen. We've had this triangle, or pennant as it's called, where you've had the highs matching from the previous high and the lows from the previous low. That forms this pennant pattern. We broke out above that pennant at the 101.40 level, and we've gotten above the 102 level. We're trading a little bit below that because of the rally we've had in the euro so far, which has only been about 70 pips. But anything more than that, could put this thing going below the other part of this triangle. Now, if we were to get below 100.80, this would certainly be a false breakout in the dollar index, and that would lead to substantially lower prices in the dollar index down to around the 97 and change level. Now, of course, I know most of you folks realize that there's a massive amounts of debt out here. I believe that if there's any really serious problems in the financial markets, they will come from the debt part of the things, basically corporate bonds, junk bonds, and finally the government bonds of various countries. But, that's neither here nor there. The problem is most of this debt is denominated in dollars, and so they have to pay this off. And if the dollar goes up, it makes interest rates go higher, and if the Fed raises interest rate, that puts another strain on the people trying to pay the money back. That's where the real problem lies. So there's a little bit of a quandary going on in these financial markets based on the U.S. dollar, but that happens all the time. It's nothing that's nothing new. Now, I wanted to share with you a couple of things here. One is this weekly chart on the NASDAQ, because we had this pretty big run up in the NASDAQ. and we'll put this up here. You'll see that we got up to the 11,000. Excuse me. This is the New York Stock Exchange Index chart. Let me get to the Nasdaq. That basically completed the 1.618 that dollar index, the New York Stock Exchange Index chart. And the reason why that's important is if we close lower today, being on the end of the week, if we close lower today, that could leave a shooting star pattern in the New York Stock Exchange Index weekly chart, and that would be a sign that maybe these major gaps that we've seen, 4 of them in the Dow Jones over the last 3 weeks, 3 or 4 weeks, will start to be getting to the point where there might be some type of a correction, maybe even as much as a 3-day correction in stocks, believe it or not. Could something like that happen? Who knows? If we look here at the Nasdaq, what's happened here, this is into the, you'll notice here what the pattern was going into the thing. We had such a beautiful timing pattern coming in on the February 27th, 28th new moon and solar eclipse, but with the talk on the address to Congress on that night, on March 1st, that basically put everything into a spiral coming into Wednesday, March 1st, and with the big gap that we had in the Dow and the explosive move. Actually, there was a lot of volume up there, believe it or not. And in the Nasdaq, it actually lost open interest again with that big move we had in the Nasdaq on Wednesday. The same thing occurred. So it's going to be very interesting to see how this ends up. But you'll notice here from February 24th to February 28th to last night, that was exactly 61% retracement of those moves. And if you look at the time between February 24th and 28th, and the 28th to March 3rd, that's equal time, so that makes that a 135 pattern. That's why it's very, very important that we hold the 5340 level in the NASDAQ futures, because if we don't, that's telling us that this pattern has a potential to fail, and if it should get back below 5330, which is 30-some points away, that means that everybody that bought it after the election is going to be underwater. That number in the Dow Jones would be at 20,700, I believe, something like that. That would put the Dow would have to reverse about 250 points on a Friday in an up week, which I don't think it can do that, but we'll watch it very, very closely. No matter what happens, we're going to have some more volatility like we've never seen before. The VIX index is held up relatively well. It has not made new lows, and if you have a chance, take a look at the VIX index, because it's formed a beautiful 135 pattern, which means a rally coming in the VIX. Whether this is going to happen or not, I don't know, but like Jim Twentyman says, defy human nature. Do the work yourself. Go in and take a look at it, because it's a really nice pattern to look at, because the VIX has got a perfect 135 pattern where the cycles between 1, 3, and 5 are higher. They're coming all in at Fibonacci numbers. In fact, right spot on 786 yesterday in the VIX, and it actually had a little bit of a rally after that. But the main thing is that as long as it can stay above this low that we made yesterday, it's got a chance for some rallying. And believe me, we've had virtually no volatility up in these levels. You would think that someone would be taking protection, but like the candy man said, as long as I'm selling candy, everybody's buying. So we'll see. Remember that everybody that buys a stock, somebody's on the other side of that selling. That's a very important thing to remember. If you ever read the book Reminiscences of a Stock Operator by Edwin Lefevre, that's one of the things that he always talked about, is when he was ever doing one of his market strategies, he would always wonder who was taking the other sides of the trade. Was it smart money, or was it the public? And sometimes the public is smart money, not often, but it is. And then you'll see that these things can really move, and we'll look at it. But we've made a the people asking, what do they think about Donald Trump here in Hong Kong, folks? It's just like the United States. Some people like chocolate cake, and some people like white cake. Some people love him, some people hate him. It's truly amazing. And they don't even vote over here, not for Americans anyway, but they have strong opinions. There's no question about it. It's a lot of expatriates here, so it's about 50-50 would be my guess. But that's pretty much where it is, just about everywhere. There's just not much of a difference in what's going on in some of these things. So watch it very closely. Now, I do want to show the, hold on, let me get the other chart that I wanted to bring up here. Oh, the yen. The yen came really, Danny, the yen came right off of that 112 level. It held pretty well. That's one of the things that we'll be trading tomorrow, and it's really, really interesting to see how some of these things are lining up. So keep an eye on that yen, because as long as it can stay above 112, we've got a chance for the yen to, have some more of a really strong move. So we'll watch it. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at this volatility index that we talked about. You'll see the 135 pattern that's occurred. We're a little bit lower this morning. As long as we don't get below that 0.5, which is around 111 and change, it's got a chance for a move to the upside. You have really nice cycles. You've got a perfect 78% retracement of the low we made back on the 28th of February. So that was, of course, the new moon and solar eclipse. So we'll watch it. By the way, please read that article by Peter Brandt that was given to us by our good friend Norm Winsky. It really shows you that there are no gaps in the Dow Jones Industrial Average. Yes, 1125 is the price that we're looking at. So we'll see if that's going to be, that will be the same thing. Yeah, thank you, Basil, for telling us it was General Electric again. That's great. It has some really great information here at TFNN. So remember, there are no unfulfilled gaps in the Dow Jones. We currently have 4 of them looking at it in the face from the last 3 weeks. And we'll see how these are going to turn out. Maybe it'll take 4 or 5 years to fill those gaps. No one knows for sure, but we'll watch it very, very closely. That's going to be interesting. I'll be back on the air, of course, Monday, God willing, and we'll have some fun looking at what these markets are going to be doing next week. But I do believe you're going to see a really interesting move in these things because we've had no volatility, and that doesn't stay that way very often. And we're 11 now. We're a level now where we could really get some wild, really wild swings. So let's sort of pay attention to some of these things. That's the main thing that we're looking at. Now we'll watch these things as we go through. One of the other things I wanted to mention, by the way, the Dow did gap down today, but it has not left the island that I wanted to see yet. You won't know that until Friday. If that in fact happens. So just keep an eye on it. Folks, remember, we live in interesting times, and that is a Chinese curse, folks. That's not a Chinese adage of any kind. It's basically a Chinese curse, and so you want to keep an eye on it. But watch it. 877-927-6648, and may God bless each and every one of you.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.